If you've been wondering, are prices dropping? Are homes taking longer to sell? Is now a good time to buy or sell? Well, I'm going to break down exactly what happened in February 2026 and what it means for you. Let's start with inventory. The number of new listings coming to the market dropped about 15% month over month. So that means fewer sellers listed in February compared to January. However, and this is really important to note, our overall active inventory is still about 17% higher than it was this time last year. Even though fewer new homes came on the market last month, buyers still have more options than they did a year ago. That increased inventory is one of the reasons that we're seeing a shift towards a more balanced market. Now let's talk about closings. The number of homes sold increased about 7% compared to January, which is a healthy month-over-month bump. But when we zoom out and compare year over year, closings are actually down about 2%. So activity hasn't disappeared per se, but we're not moving at the same pace that we were last year. Now let's address what everyone really wants to know: prices. The average sold price decreased about 6% in February, landing at around $641,000. The median sale price is also down roughly 3% compared to this time last year. And we saw a noticeable drop in price per square foot. In January, we averaged about $330 per square foot, and in February, that dropped to $307 per square foot. That's a sizable shift in just 1 month. Now, does this mean the market is crashing? No. What it does mean is that we're seeing price adjustments. Sellers are having to price more strategically, and buyers are gaining a little more negotiating power. Homes are also taking longer to sell than usual. Average days on market rose from 156 days to 198 days. And the median days on market is up nearly 36% year over year. That tells us buyers are just taking their time. They're comparing their options and they're negotiating more. The urgency we saw over the past few years just isn't the same right now for buyers. One interesting stat this month is cash sales dropped to 37.5% of all transactions. And typically in our market, we see somewhere between 45 to 50% in cash sales. So that's a pretty noticeable shift. It suggests that we're seeing fewer investor-style purchases and possibly more financed buyers entering our market. And that's going to change negotiation dynamics, timelines, and sometimes even our pricing strategies with our sellers. If you're a buyer, this is going to give you more breathing room. You're going to have more inventory to choose from. Homes are sitting longer and prices are adjusting. And that can create an opportunity, especially if you've been waiting for less competition. And if you're a seller, this doesn't mean that you can't sell. That's not what we're saying. Homes are still selling, but pricing correctly from day one is more important than ever. As a matter of fact, I'm going to go ahead and say that again. Pricing correctly from day one is more important than ever. The market is rewarding realistic pricing and strong presentation, and it is punishing overpricing. Plain and simple, folks. Overall, what we're seeing is normalization, not a crash, not a spike, but a market that's finding balance. If you're thinking about buying, selling, or investing, especially here in our high country mountain market, strategy matters more now than it has in years past. If you'd like to talk through your specific situation, feel free to reach out. I'm Terri Boyer with Mountain Life Realty, powered by Keller Williams High Country, and all of my contact information is below, so feel free to call, text, or email me. I'm always happy to help. And if you enjoy these market updates, make sure to like and subscribe so you don't miss next month's numbers. I'll see y'all next time. Bye, y'all.